I'm speaking with Hugh Selby-Smith, Chief Investment Officer at Talaria Capital. Hugh, first of all, thank you very much for participating in the Inside Network's Investment Leaders Forum, Byron Bay.
James, I'm absolutely delighted to be here. Thanks for having me.
And it is a great pleasure having you. Hugh, Australia is experiencing a major demographic shift. The amounts are thrown around, they get larger and larger, but something like $1.2 trillion is going to transition from accumulation into the retirement phase over the next 10 years. How do you see that wave of money impacting investment strategies and asset allocation for Australian investors?
Well, I think when you're in decumulation stage, you really need to think about three things. You need to make sure that you have multiple sources of return, which are distinct perhaps for how you've made your wealth. You need to absolutely be conscious that you lose less when the market goes down, because sequencing risk is a real risk, albeit we really haven't had to hold up with that over the last decade or more. And the third key thing is you're trying to match your liabilities with the greatest certainty, and that means ultimately lower volatility products.
Do you think that longevity will surprise people, a pleasant surprise, in that they live maybe a bit longer than they may have expected to, but then that brings the worry around still having some growth assets potentially to help replenish their pool of funds?
Well, I certainly agree with you that I hope people are going to live longer going forward, but I mean, ultimately, you've still got to have a CPI mindset, CPI plus, and of course, with a good financial advisor, they will also be able to model out how your consumption pattern changes decade by decade as you move into retirement and hopefully longer into retirement. So I'd still have a CPI plus mindset, honestly. And I think to achieve that, you will need a degree of growth assets.
As you mentioned, the CPI plus mindset, because income generation is obviously the key challenge for a retired person. But Australia's retirement system still lacks clear guidance on structuring sustainable income streams. The industry's being told to do it, some are lagging. What strategies do you believe will be most effective in addressing that retirement trilemma?
Well, it's a great question. I mean, it's a very broad question, obviously. Our strategy, without speaking specifically about Talaria, is really built with an asset and liability matching mindset. It really came out of the world of insurance. All savers need to think about a corpus of savings and liabilities they want to match. And I think if that's the starting place, then that's a good place to kind of end up with the outcome of the portfolio that the retiree will have.
You mentioned sequencing risk. Now, market volatility, particularly in equities, obviously poses a very significant risk for retirees with their schedule of drawing down funds from their assets. So what role do defensive assets, truly defensive assets, and alternative income sources play in mitigating sequencing risk?
I think they're incredibly important. I mean, if you think about what's created the wealth over a long period of time, at heart, it's been that nominal growth has been better and the cost of finance has gone down. Because an asset is just simply the cash flow growth, the return you want to get, and the cost of finance. Now, that's been part of globalization where since really the early 90s, and that's coming to an end as we move into this mercantilism or economic nationalism where independent geographies or countries are going to have to stand up and allocate their own capital to fulfill the society's needs that they have of their population. So that means that alternative assets in terms of spreads, in terms of that can exploit risk premia rather than actually based on a risk-free rate and are based off ever-expanding multiples and things getting more expensive, are going to be crucial in my view going forward.
Talaria uses option strategies at the core of what you do. So what role do option strategies play, and could option strategies play in generating income and managing volatility? And how should investors think about these tools, and what are the really crucial considerations for implementing them successfully?
Sure. So options is a very broad category. So let's just be careful. It's not a catch-all in terms of there's a lot of strategies that use options that I'm not a believer on. I think the key consideration is that you do not want to be using leverage, because I think that opens up a much wider range of outcomes, many of them negative. And history's been littered with option strategies that have used leverage. And, how do you go bankrupt very, very slowly and all at once, as Hemingway said in The Sun Always Rises. I think using options to reduce risk, which is receiving an upfront payment to commit to something that you are going to do anyway, sets up this nice asymmetry where you have a second lever of returns it mitigates the downside risk, and it gives you a contracted rate of return. I think it's going to be an important component of the retirement space going forward.
Looking ahead, how do you see the retirement landscape, the landscape of retirement investing, that mindset, evolving in Australia, and how can advisors help their investor clients prepare for that so that they really fully enjoy their retirement?
Well, I think at the human level, there's a couple of things. One of the great things about living in Australia is that people are optimistic. And so even my 83-year-old mother continues to talk about growth assets and moving into the future and living forever. So in some senses, I think it's educating as people age that, listen, money's only an enabler for what it allows you to do. We can achieve these outcomes so you can still live the full life that you want to with taking less risk. So I think there needs to be an education piece around you've done the hard work in terms of your corpus of savings. Why not just take less risk and you'll still get the same outcome? I think that's really the heart of it. I think the second key thing is to make sure that the savings pool, the retiree, understands that they have options to make sure that government can't take an increasingly large share of them. Because I do worry about that given the fiscal backdrop of all developed market economies. So I think strategies that are liquid and are mobile and are largely private client led are crucial to being able to retire with confidence that your savings will remain your savings over a long period of time.
Hugh Selby-Smith, Chief Investment Officer at Talaria Capital. Thanks so much for your time, Hugh.
James, thank you very much.